in November, Bob Dahl, Vice Chairman and Global Chief Investment Officer of Fundamental Equities at BlackRock, joined us to review his 2009 predictions. He was incredibly accurate, even anticipating that the U.S. federal budget deficit would soar past $1 trillion. Bob is back now from BlackRock's New York headquarters to share his predictions for this new year. Bob, great to have you.
Happy New Year.
So a year ago, you were in the minority predicting the subsequent stock gains and a stabilizing economy. So if the forecasters may have been too cautious then, what do you think of them now? For example, Paul Krugman saying there's a 30 to 40% chance the U.S. falls back to recession late next year.
Yeah, I think that probability is not zero, but I think it's nowhere near that high. There are a lot of natural momentum operating in our economy as we speak. Inventory replenishment, for an example, the retrenchment from the fear of depression and nationalization of the financial system. All these things are working in the favor of our economy continue its recovery, which began a couple of quarters ago.
Now, when we wrapped up your 2009 predictions, you told me you went out on a limb predicting the swelling budget deficit. So with regard to these new predictions, where would you say you really went out on a limb this time?
You know, at this time of year, all 10 of them feel out on a limb. It's only after the fact that you found out which ones, how could you have been so stupid, as it were, and others that, my goodness, how could you have seen that? So we will have some. I don't know which ones they are at the time. I do remember a year ago that was the most difficult to make.
On the budget deficit. All right, so John Bogle was just on with us. He says he's feeling very cautious this year on all accounts. What do you think?
Well, I think that caution, given where we've come from, makes some sense. But there's an awful lot of stimulus in the system that is already making a difference. We had a good third and fourth quarter for the U.S. economy. I think we'll have a good 2010. Not a normal recovery because of the headwinds and the things that he's concerned about, but an above-trend growth rate. I'm going to call it 3+ real growth. That should be enough for profits to expand noticeably, given the cost-cutting that took place, the leverage available to corporate America with a little bit of top-line growth.
All right, so let's get to it. Let's run through your 10 predictions for 2010. Number one, the U.S. economy, as you just said, grows above 3% and outpaces the G7. That latter part really caught my attention. Why is that going to happen, especially with all the talk of emerging markets growing so fast and furiously?
Well, of course, the G7 doesn't include the emerging markets.
Well, yes,
that's a later prediction. Of the G7, we think the U.S. will be the strongest. The only country likely to give us a run for our money is Canada. We're projecting 3.2 real growth for the U.S., 3.0 for Canada. Most of Europe and Japan, a one handle on their economic growth. We've had stronger stimulus. Our leading economic indicators are pointing higher faster than the rest of the G7.
Job growth in the U.S. turns positive early in 2010, but the unemployment rate remains stubbornly high. This is prediction number two. Are we going to continue to see unemployment at 10%? What is your forecast there?
Yeah, obviously a bittersweet projection. We think that job growth will turn positive probably in the first quarter, maybe real soon, but unfortunately not by a lot. And therefore, I think the unemployment rate in the U.S. remains stubbornly high. We could be 2 or 3 years from now, and it still be above 8%. We think it falls modestly during the course of 2010 into the 9s, but not by a lot.
So the December report on Friday will probably see a negative payrolls number still?
Well, it could be a positive. It could be our first positive. It's going to be, as you know, from the continued trend, slowly but surely, the moving average of employment is moving up, and we'll eventually have positive territory.
Earnings will rise significantly despite mediocre economic growth. John Bogle says he expects about 6-7% earnings growth in the new year. How do you see it?
Yeah, I think it'll be a lot higher than that. Just the compares get easier. We've got some top-line growth. If we're right about 3+% real growth, we have cost cutting that still has to work its way through with the leverage. We've had good productivity in the United States. The lower dollar makes us able to sell more outside the U.S. I think all of this will connect to a strong double-digit earnings per share growth for the S&P 500 in 2010.
Let's hit one more point before we have to take a commercial break, and that's your prediction number 4. Inflation remains a non-issue in the developed world. Are you looking at the price of oil right now, or is that a whole different issue for you?
No, it's for real. Commodities are going up. Commodities represent less than 10% of the inflation basket in the U.S. It's about wages. It's about excess capacity. There's plenty of it, and that's why the inflation rate is likely to stay fairly low in the U.S. Normally, in the first year of economic recovery, the inflation rate continues to fall.